Let's go over every single dividend that I received in the last financial year. It was a good year for me. I did okay. I have been increasing the amount of dividends that I've been getting year on year since I started in 2020. We'll have a quick recap of how I've done in previous years and also have a look at how I might be tracking for this financial year as well. I'm not per se a dividend investor. I hold some growth stocks, I hold some ETFs, and I hold some dividend businesses. Some people are very specifically just dividend investors. That's not me. Not saying that's a bad thing, but what I like to do is have a range of different investment products and assets that I am hopeful to grow in the long term. I created a spreadsheet to track against all of these dividends, just as my own peace of mind to see how I'm doing, and I've also broken it down to work out how it works out actually by hour. So if I was to get those dividends, divide it by 37.5 hours a week, what sort of salary am I going to get from the dividends? Now, at the moment, it's nowhere near enough, but we're building and we're on our way to getting somewhere that eventually, hopefully, will replace the day job. So this is the really rudimentary spreadsheet that I created in order to be able to track against it. As you can see, it's really basic, but it does the job for me. I'm no Excel whiz, but this is what I use and this is what I like to use. So let's go back to 2024. We can see it here. First thing you're going to notice is a lot more businesses in here than there are in 2025. Over the years, I've simplified things and I've taken a lot of businesses out and I've just sort of condensed it a little bit. I think when you start investing, you're buying everything and anything you can get your hands on, but you soon realize that's probably not the best approach. So we'll go back to the beginning of the financial year in 2024, and that was April. So April was a bit of a quiet month for me. It always is because of the positions that I hold don't typically pay out that much in April. So I got £10.11 from Pepsi and £12.84 from realty income. Now, the pattern you're going to see is every month you'll see realty income coming in. Another important point to note is every dividend I receive, I reinvest directly into that business. So I've put nothing into these individual businesses in terms of additional capital since I started at the beginning of last year on this. So all of the growth, all of the increases have been coming from reinvested dividends. So if you've got £100, you get a 10% dividend, £10, and you reinvest that dividend, your holding is then £110. The next time you get a dividend, you're going to get £11 because you're going to get 10% on the 100, 10% on the 10, £11 dividend, and that's how it snowballs. So £10.11 from Pepsi, £12.84 from realty income, and nothing from my ETFs in April. So that gave me a total of £22.95. It's all right, does the job, and that works out at 11 pence per hour at 37.5 hours a week, so not enough at all. May was a little bit better, and it typically is a little bit better. There's peaks and troughs with this. I'll show you a chart at the end, actually, in terms of how we're tracking against it. So May, £3.56 from Apple, absolutely tiny dividend, and that's because the yield is so low on that. I hold about £3,000 in Apple, I suppose. Aviva, it's a biannual dividend. It's a really tasty one. Aviva has been brilliant for me. It's paid me great dividends at a high yield, and it has also grown really well as well. So it's done good. I'm happy with it. Lloyd's, another one that has done really well for me. I think I'm up about 50% in Lloyd's. Grown really well, pays a reliable dividend, again biannual. A lot of the UK businesses pay biannual dividends twice a year, and realty income £12.93. So that brings me a total of £120.41 for May, which is 74 pence an hour. June is a tasty one, right? Every June I get excited. £1.96 into Alphabet, again tiny yield dividend. £4.81 into Microsoft, again a tiny yield on that one. Pepsi, one of the worst performing businesses in my portfolio, £12.04. And the last one is Johnson & Johnson, which is another really bad performing business, £11.29. Unilever, just short of 20 quid. A realty income, of course, and the big one, £152.30 from Legal and General. That pays twice. The big one is in June, so that's going to be coming up soon, and I'm projected to get around £210 in June for that, which will be one of, if not the biggest dividend that I've ever received. So individual businesses, 215, but also we got some cash from our funds. So biotech fund paid £12.20, emerging markets £33.05, £78.05 into the S&P 500. I hold VUSA, VUSA, which of course, as you can see, because I'm getting dividends, is a distribution fund, distribution of it. You can get an accumulation one, which for some people is good. My All World was a really tasty one, £182.91. I hold the Invesco FTSE All World. There are other ones available, but that's got low fees. There are even cheaper ones. MSCI is cheaper, but that one, I'm happy with it. So that gave me a total of my funds of £306.21 and a month total of £521.77. So we broke £3.21 per hour, which for me is absolutely spectacular. My first job was working as a silver service waiter in a posh place called Horcross Hall, and I don't think I earned that per hour. I think it was on £2.88 or something. That was a long time ago, though. In July, really quiet one, just realty income. In August, really quiet one, just £3.50 from Apple, £13.38 from realty income. September is the second biggest month for me in the year. £1.89 from Alphabet, £4.71 from Microsoft. Johnson & Johnson, £11.14. These are all quarterly. If you'll notice, for example, I'll just pick one at random. The one we're on, Johnson & Johnson pays in March, June, September and December. £20, 11 pence from Unilever, 36 from Lloyd's biannual, so that's the second one for the year. £13 from realty income, and the second Legal and General dividend as well came in. So that one's always much smaller, but still pretty tasty. £68.58. My funds paid as well. Emerging markets, £41.94. S&P 500, £81.17, and £135.78 from my old world. So that's a total of £414.68. September, then £414.68, meaning £2.55 per hour. Now, the beauty of dividends is it is one of the only true passive incomes that I think exists. You put all the work in up front, you buy the businesses, they go out and do their thing, sell their stuff, and you get a proportion of those sales. Absolutely love it. October then, relatively quiet, a couple of dividends. Aviva's second one, £46.05 from realty income. Total, £59. November, really quiet. Apple, £2.03. Realty income came in, of course. And December is always a good one as well. £1.97 for Alphabet, £5.33 for Microsoft, Johnson & Johnson, and Unilever, and realty income. So that gave me a year's total. So we'll switch it up. We'll go to calendar year of £769.11 in individual businesses and £925 in my ETFs. So £1,694.75 dividends. Right, for free. All of them reinvested directly back into the businesses or ETFs that paid it. And that worked out over the course of the year that I increased my salary from dividends by 78 pence per hour. I mean, it's all right. It's even better when you compare it to previous years, which we'll do after we go into 2025. So 2025, January, a quiet one, £12.30 for Pepsi, £14.14 for realty income. Now that fluctuates as well, you'll see, and that's because of FX. Depends upon how the pound is doing against the dollar because it's a US business. So it goes up and down despite me reinvesting the dividends. February, really quiet, Apple and realty income. March was good, but not as good as the previous March, I don't think. Let's have a look. Oh, ever so slightly, £2 better. So March, Alphabet, Microsoft, Pepsi, Johnson & Johnson, Unilever, and realty income. £65.41 for individual businesses, and one payout from my old world, which was, Invesco one, which is £102.40. Total £167 then. April is done and dusted as far as I'm concerned in terms of dividends I'm going to get now. So £13.63 realty income, and a couple of the other ETFs paid. So £21.54 emerging markets, S&P 500, £95.57, so £130. So far this calendar year, it's £341.05. Now, however, the total across the financial year then, actually we shouldn't even include April. No, I haven't done in my calculation. The total across the last financial year then is £1,704. Right, that's really tasty. I'm really happy with it. The coming year going forward, I've already had a look on stock events. Here's a clip here. So over £2,000 we're tracking against now. So it's an increase slightly. What is that? 20%, 25%, something like that. But compared to previous years, so we'll go to 2020. Let's have a look. My first year. Look how messy this is. Look how many bloody businesses there are. My first year was £66.09. Second year, doubled it. £156.55. That was 2021. Obviously, this comes from significant capital getting invested to do it. Third year, 2022, I ended up with £470, so tripled it versus the previous year. 2023, more than doubled it again, £1,005. 2024, didn't quite double it, but an increase of 70%, we'll take it. And 2025, like I said, we're on track to do just over £2,000. So that'll be an increase again, hopefully. And I will, of course, be putting more into the funds specifically that I'm investing into. So as I'm focusing on funds this year more than individual businesses, I'll leave them be. I'm happy with the ones that I've got for the time being. But the funds are going to get the vast majority of my allocation. And that is mainly going to be the old world as well. And a little bit into the S&P 500. So let's have a look at a couple of charts that I've done. I haven't updated this for 2025 yet. But you can see 2020 is the blue at the bottom. The amber, orange one is 2021. 2022 is the white one. and then the yellow one at the end is 2024, so significantly increasing. The dividends as well, I track like this, as we can see month on month how much I'm getting and the exponential growth that we're seeing associated with it as well. I've not done it to the end of last year yet, actually. I'm a bit behind. But look at that. That is a trend line that is going in a very tasty direction as far as I'm concerned. I also have this financial independence tracker. So what I wanted to do is get to, I think it's £560,000, £540,000 by the time I'm 50. That's going to be enough for me to bridge the gap to getting my pension to 57, live a pretty enjoyable lifestyle. I am not someone that suffers from salary creep. I don't splash out the cash. I've got a 10-year-old car. I'm not a big spender, so that's more than enough for me. And so far, we've done okay for February. I've just updated March, as we can see how we're doing. And that's basically been the impact of tariffs and Trump, etc. So the blue line is what I need to stick to in order to reach it. The orange line is what I've done so far. And I can expect it will continue like that. It's going to go up like that the whole way along. And I'm more than comfortable with that. It may even underperform. We need to be aware that that can be the case as well. So if you haven't already started on Trading 2 and 2, there's a link in my bio. If you use that and download the app and deposit £1, you'll get a free fractional share as a result of doing so. So will I, in the interest of transparency. Don't forget your capital's at risk and terms and conditions apply. Now, if you want to see all of the investments that I have within my portfolio, I'll go over that in this video here. Any questions, let me know.